Hello and welcome to another video. Today I'll be giving another update on my portfolio. As you can see here, my account has grown to what is now worth $1,001.36. I added another $500 into my portfolio, but I do have gains of 0.18, which equals $1.54. Throughout the whole week, I was actually kind of down, or my portfolio was down throughout most of the week, so I was kind of getting a little discouraged. I know I mentioned in the other video you can't let those things discourage you, but nobody likes losing money, especially someone like myself. I kind of just started, so when I see that I'm losing some money or that my stocks or my holdings are going down, it can be a little discouraging. But again, that didn't deter me from investing or it didn't cause me to sell my portfolio or anything like that. Because again, I know there's gonna be dips in the market. You may lose value on some stocks 1 week, even a month, but you gotta have faith, or you gotta trust that your holdings will go up in value eventually. Now, the changes that I made to my portfolio are here. So I put my initial holdings that I had when I first opened my account, I put them all in just one portfolio. I had to do several weird movements to my account, trying to get them into their own separate pies. I wish M1 Finance would just allow you to drag and drop certain holdings from one pie to another, but I guess they just haven't worked on that feature yet, or I don't know if they're working on it. But I wish I could just do that. For example, if I wanted to move something from my dividend pie into my growth and value pie, which I just recently created, or if I wanted to move something from my growth and value pie to my dividend pie, I wish I could just drag and drop, or click on it and or give me the option or something like that without having to sell. Because as of right now, you have to sell your holding in a certain pie, and then you gotta click buy in the other pie. So you gotta sell it in one pie, but then you gotta click on the other pie and buy it, and it's kind of a little confusing. It's not. I don't want to go over it. I can't even explain it right now. It's not too complicated, but it's just a little tedious. So M1 Finance, get on it, try to fix that. But I did manage to do that. However, that caused my my pie to look a little weird. It's a little out of whack. You can see my dividend pie. It looks like a really big slice, out of balance. And my dividend aristocrats right here it's another holding that I have, but it's also out of balance compared to my other holdings that I have. But as you can see here, I finally got it to where I wanted it. So in order to fix that, I don't want to sell any of my holdings in my dividend pie. So I just went ahead and made the allocation of the money to 20%. So from now on, only 20% of the money that I put into my pie is gonna go into the dividends pie, and the rest will be going to my dividend aristocrats and my growth and value pie. And what I wanted to talk about today was my new addition to my portfolio, which is the growth and value pie. As you can see here, I started my pie with $100. So I am up 1.14%, which equals $1.15 right now. So what I wanted to talk about a little bit was the stocks that I added here. And as you can see here, I added several different stocks into my growth and value pie. I do have them at different target allocations here. Some of them are 13, 12%, and the other ones, such as Disney and UPS, are at 2%, 3% for Starbucks and such. The reason I did that was because I wanted to invest more money in the ones that are what I consider more value or growth stocks. The other ones I really wouldn't consider value or growth stocks. For example, Disney, UPS. Maybe I should have just put them in their own separate pie called, I don't know, I should have just made a different pie, but I already added them here, I already funded it, and I don't want to go through the whole trouble of trying to get them out of the pie. So I just leave them there for now. In the future, hopefully, whenever M1 Finance fixes that issue where I can just move one slice from one pie to another, I think I will really do that. But right now, the ones that I added are, well, as you can see here, I did add Amazon. So Amazon, as you can see here, they have a market cap of almost $1 trillion. Right now, it's at $960 billion. They get a PE ratio of 156, which is pretty high. But again, that's due to mostly to them using all their profits, reinvesting them back in the company because they're trying to grow the company as fast as possible, and I think that's their goal right now. They're trying to just grow and grow and grow, and I really do think that Amazon's got way more room to grow. Not just here in America, they got a lot of room to grow all over the world. So that's why I'm trying to invest in Amazon. I know when I first opened my account, I did say I was going to try to focus on dividends, but I don't want to let this opportunity pass. I know that Amazon's a great growth stock, and you can see here, it's just been going up and up and up. It's more than doubled its value in the last year, and that's one of the reasons I chose Amazon for my portfolio. The next stock that I added is Microsoft. Now, Microsoft, another, what I would say, a very solid company. They have a PE ratio of 53. They also pay a nice dividend of 1.4%. And their market cap's at $869 billion. I actually do believe that Microsoft will be a $1 trillion company not in the not too distant future. They got a lot of things going on for them, so I really do believe in Microsoft. I do think the direction the company's going, they're trying to diversify not just from the Windows operating system, especially their cloud service and many other things that they're doing. So I do believe again that Microsoft will be a $1 trillion company in the future. The other stock, of course, Apple. Now, recently, Apple did surpass the $1 trillion market cap. They have a PE ratio of 20, which is actually pretty average, and it's below the average, which is 25. And I think that's actually pretty good. I do believe with the new lineup of iPhones that they just announced this year or last week, they will be growing some more. The revenue will be streaming in. A lot of people will be updating their phones. I know I've actually seen some negative articles or videos about the company not, or they're not innovating. And to a certain degree, I kind of do agree. I will have to say I agree somewhat. Now that doesn't mean they are great at business. Tim Cook's doing a great job in the business side of things, but I can see where they're coming from, where they're just not. People don't feel that they're innovating as much as they used to. They're kind of just taking the products they already have. They're just kind of maintaining whatever they have, which is not necessarily a bad thing. At least for the next foreseeable future, we're gonna need our phones and the smartphones, but I think people just want some kind of innovation, just the way whenever they introduced the iPhone, it was just a completely new, different concept whenever they first introduced it. But at least for now, Apple's got a great business. They got great products right now. Whether you agree or disagree, they're just a fantastic company to be invested in right now. And they got a dividend, which I believe is only going to grow as time passes by. Now, another stock that I added is Google. Now, Google's got a huge market cap of $814 billion. Got a PE ratio of 50. They currently pay no dividends. However, again, just like Microsoft, I actually do believe that Google will be passing the $1 trillion market cap in the not too distant future. So I do believe maybe not this year or even next year, but they will be passing the $1 trillion market cap. And I believe that Google is a great company to invest in. Now, the next stock that I invested in is Facebook. Now, Facebook's been getting a little hammered. This last month, it's been just the stock kind of crash. It's still in a steady decline, but I do believe the bottom should be here soon. It did go up a little bit last Friday. However, it's still in a steady decline, as you can see here. It just crashed from its $214 stock price. It's now at $162, but the company is still at $468 billion market cap. They got a PE ratio of 25. They currently pay no dividends, but Facebook, one of the reasons I really do believe in Facebook, it's not just the Facebook platform, but their Instagram and their WhatsApp application that they have, but especially Instagram. Those two applications that they haven't been monetized, so there's so much room to grow there, especially Instagram. I think Instagram then is the future, at least for now. So Facebook has so many other ways to make money in the foreseeable future. If you don't buy in right now, I believe that you might regret it in the future. At least I'm buying it, but you can decide whatever you want to do. The next stock I put in my portfolio is Alibaba. I did say I was going to go into Alibaba in my last video. Now, Alibaba's got a market cap of $423 billion. It's got a PE ratio of 48. The earnings per share is 337. It's currently paying no dividends. Alibaba is like the Amazon of China. And recently, I think in one of my last videos, I made a mistake. I said that the CEO, Jack Ma, was stepping down. He's actually not the CEO, or he hasn't been the CEO for a while. I watched a video by Jeremy from Financial Education. He made a video about it, and he was just saying that Jack Ma has not been the CEO for a while. So all these fears that have been going on with the stock, at least concerning that particular issue, not including the tariffs, which Trump said he was gonna impose, then he said he wasn't, and now there's a chance that he will. So I don't know what's going on there. So that's causing some fear, at least in the U.S. markets, for Alibaba. But another thing that compounded with that sell-off last week was the fear or the rumor, the way the news reported that Jack Ma was stepping down. But Jack Ma, he hasn't been the CEO for a while. He's still involved with the company, and he plans to just, in the next year, leave the company completely so he can focus on other things. However, the CEO that's been running it has proven himself to be, a good CEO, and the company has been running smoothly. I think, again, Alibaba still has a lot of room to grow. So Alibaba is another stock that I added to my portfolio. The next stock that I added is like JD. Now JD, at least to me, is a little more speculative. I do believe Alibaba is a superior company, but JD's also got potential as another competitor of Alibaba, and not just them, but Amazon itself too. Just like Alibaba is another competitor to Amazon. They haven't clashed because they're not really involved in each other's markets yet. But in the foreseeable future, I can actually see them clashing later on. But at least right now, Alibaba's got competition in its own backyard in the form of JD. And they got a market cap of $39 billion. Recently, a lot of things have been going a little wrong for the stock. It's been on the steady decline, but just different things with the CEO and different things with the tariffs again. So a lot of Chinese stocks are down because of the tariffs that President Trump has threatened to impose. But I think right now it's a great buying point for Chinese companies. If you do believe in those companies, or you think you want to invest in them, I think right now would be a great time to invest in them. So JD is another stock that I added here in my portfolio. The next stock that I added is Tesla. All right, so Tesla is another company that I added. They have a market cap of $50 billion. They got their PE ratio is negative. Well, it's not applicable because they get a earnings per share of a negative 16. The company hasn't made a profit yet, but a lot of people, including myself, do believe that in the future they'll be making a lot of money. So because I do believe that the future is electric, there's been a lot of volatility with the stock as of late. Because of the CEO and different management shakeups at the company. But overall, the stock's been going back up. However, I am investing in this company because I do believe in their vision. And just right now, because they're not making money, that doesn't mean anything, because Amazon was not making money for the longest time. Amazon has only recently started making a profit. So to me, Tesla is one, again, more like a speculative stock, but one that I believe in, and that's why I'm investing in it. Now, the next stock that I have here is Netflix. Now, Netflix got a market cap of 158. However, that is due to them reinvesting all their profits back into the company, just making great new shows. They got like BoJack Horseman, Orange is the New Black, House of Cards, among many others. No one's watching TV anymore, so we'll see what happens. But I do believe Netflix is the future, or services like Netflix or Amazon Prime Video, or really the future of programming. So that's why I invested in Netflix. Now the rest of these stocks like Nike, Starbucks, Home Depot, FedEx, Disney, UPS, I kind of just added them there because I think they're great companies to invest in. They do pay dividends, and I believe they're great companies, great stocks. So that's kind of why I added them. And as you can see, that's the new addition to my portfolio. This particular pie is up 1%. Overall, my holdings are up 1.8%. I still haven't received any dividends. I haven't even had my portfolio in M1 Finance up for more than a month. So it's okay. I know I'm not supposed to get dividends right now. So for now, these are my holdings. I may add a couple more stocks here or there this week, but from there on, I probably won't be adding as many stocks anymore. So I'm thinking of making a new pie called Stuff I Use, and it'll be comprised of companies that I use a lot. But I don't know. We'll see what happens. But that's it for now. These are the only stocks that I added. And again, you can see them here. I'll leave the ticker symbols in the bottom. If you want to sign up with M1 Finance, I'll be leaving the link in the description. We'll both get $10 once you fund your account with $100 or more. But if you like the video, just leave it a thumbs up. If you didn't like it, give it a thumbs down. Let me know why you like it or why you may not like the video. What do you think of my stock picks? If you think I should get different ones or something, I don't know. Just give me your opinion, and I'll be reading those comments. But I'll see you the next time.